Morgan Stanley is out, as we have been talking about, with its mid-year report and outlook. Strategists reiterated their 6,500 12-month target for the S&P 500, suggesting a better second half of 2025 for markets after the huge shock from Trump's trade strategy. Let's bring back Morgan Stanley's chief U.S. equity strategist and CIO, Mike Wilson. Mike, one of the drivers, I guess, on the upside could be a weaker dollar, right? We've seen the dollar just plummet year to date. I'm looking at the Bloomberg Dollar Index. It comes from 1320 down to 1220, so down 100 points. Does that fuel, you think, better revenues for U.S. companies?
It's definitely part of the storyline. I mean, it's one of the reasons we made this call about 6 weeks ago when the dollar was weaker. We said, you know, U.S. versus rest of the world is about to turn up because it affects revision breadth, which is the #1 driver of stocks. And we see that now in the data very clearly. It really started with Microsoft when they reported earnings. You know, they had a big upside beat, and that was driven, a lot of that was driven by currency, and that drove revisions. And so think about S&P 500. It's multinational companies. They get about 30-35% of revenues from overseas, and they know how to manage the currency situation. You always hear about currency when it's a headwind. They never talk about when it's a tailwind. But that has driven the revision breadth, and that's what models are picking up now. And if we just stay around these levels, that tailwind will persist into the second half. Our forecast for the dollar, by the way, in this mid-year update is for another 10% decline. So you think about in dollars. So if that continues into next year, okay, that's just going to provide another tailwind for 2026. It's just another reason why the S&P has a really hard time, you know, correcting more than 10%.
Isn't that rough for inflation? I mean, if we're already paying a tariff on all the stuff we buy from overseas, and a lot of the stuff we buy is from overseas, the dollar gets another 10% weaker. It just seems like that drives inflation higher and locks the Fed in place.
It definitely could. And I mean, the one to watch on that is commodities. And so I am encouraged by the fact that oil has been soft. Some of that's
good point.
Due to some of the things.
Jamie Dimon called that out as well.
100%. So, you know, commodities are the big thing to watch in that regard. But remember this, Matt. You know, stocks do well when inflation is accelerating. It's a little known fact, okay, because it drives earnings. In 2020 and 21 is when inflation really took off. Those are the two best years for the average stock. So just don't underestimate kind of like inflation can be bad for the consumer at the margin as long as it doesn't turn into a recession.
But I guess my question about the dollar is why would it drop another 10%? Now, I remember a conversation we had with Jane Fraser about a month ago, or really just a couple weeks ago back at Milken, this idea that the selling of U.S. assets has been a big problem here. Why wouldn't the same be true for stocks if you believe the dollar is going to fall?
Well, it's why it's falling, to your point. So if our call on 175 basis points of rate cuts next year proves to be true, you'll get a 10% decline. If it's only 100 basis points of cuts, it'll be less. But the direction of travel is south for the dollar, particularly against the yen, which they're not going to be cutting rates anytime soon, or against some of even the European currencies, or the currency, but also the pound, because they don't have as much room to cut in a slowdown.
Does Milken feel like years ago by now?
It feels like years. It feels like years ago. You know what also feels like years ago? The last time we saw Nvidia up on the year, right? I mean, I'm sorry, it's crazy. I'm looking at the Magnificent Seven, and I do this every morning with Matt. I keep it on screen.
I like it. I like
7 p.m. I'm waiting for Nvidia to turn positive on the year. It had for a minute, but that minute feels like a year ago.
You use BM7P. I like BM7T, but go on.
Return. Fine. Yes, I could agree with that. But you don't have a lot of the Mag 7 up on the year. In fact, you have pretty significant declines. And I'm wondering from your perspective, you were talking about Microsoft getting that gain from the dollar back, but what about everything else? I mean, at what point does the Mag 7 bring back the market, or are you counting on something else entirely?
Well, the Mag 7 is outperforming again. Even Tesla, I mean, is down a lot on the year, but it's had a really good run here for the last month and a half. And I think this all just comes back to the idea. If you're more uncertain about the future, generally speaking, what do you really want to own? Do you really want to own, you know, in all these international things and things at higher volatility of earnings, or do you want to own the S&P 500, which has the lowest volatility of earnings? You now have a dollar tailwind, and you have an administration that's pushing on the gas pedal now as opposed to the brake pedal, and a Fed that's about to flip. I mean, that seems like a pretty constructive story over the next 6 months, notwithstanding that we have maybe some near-term risks here because we rallied too much in the short term, and now we have a rate issue in the short. I don't think that's going to be a persistent issue. It's a short-term issue.
It's convincing. You're convincing. I feel like I could just spend 10 minutes with you, Mike, and then we don't have to do the rest of the show.
Great. Let's do 10 more.
Mike Wilson there from Morgan Stanley. Great having you on the set. Thanks so much for joining us.